special interview today with OECD Director for Tax Policy, Mr. Pascal Saint-Amans, who's in the hot seat, who's come out with the 15-point BEPS action plan. BEPS has been all over. It's been the talking point all over the globe, the financial world, the tax world, and at the IFA Copenhagen Congress as well. And of course, with me to ask questions to Mr. Amans is Mukesh, Butani of BMR and permanent scientific member of IFA as well. My first question to you, Mr. Amans, I think the one word I've heard from you over the last 1 month again and again and again, and even in the column that you wrote for Taxsutra, is that you have a mandate this time. And that is the big difference, that you have a political mandate to get technical solutions to complex international tax issues.
Absolutely. It's clear that what we call BEPS, base erosion and profit shifting, has become a political issue. And we have a political mandate from the G20 finance ministers. They met in July in Moscow. They told us, you need to implement this action plan. You need to deliver in the next 18 months to 2 years. And next week, there will be a summit in St. Petersburg. And it's likely that the leaders of the G20 will reinforce that mandate, asking the OECD, working with all G20 non-OECD countries, to implement the action plan.
Mm-hmm. Pascal, lucky to have you with us. You made a very important statement yesterday that the concern of 8 non-OECD countries who are in the G20 BEPS initiative is also arising from economic double non-taxation. And I would imagine that India would be in that list. But you also said that you would avoid economic double taxation. My question is that many multinationals find themselves under aggressive audits, virtually subjecting them to economic double non-taxation because of the efficacy of the mutual agreement procedure. You see BEPS casting an additional obligation on these multinationals, or are you going to still pursue with the agenda of economic double non-taxation?
I'll just add to that. In fact, you said yesterday the consensus is about tackling double non-taxation, not to go beyond that.
Absolutely. What is clear is that our mandate is, at the OECD and broadly in this context, is about eliminating double taxation. So what we start with is we make sure that cross-border investment do not pay taxes in 2 places. They should pay taxes only in 1 place, or if they pay in 2 places, their country of residence should credit the taxes levied at source. So that's the first principle. But given that, we have developed instruments which now result in double non-taxation, meaning that you can shift the profits in jurisdictions where it's not taxed, and you strip the profit out of the source country and you don't pay anything at the residence country. A country like India, obviously, is very much willing to put an end to double non-taxation because it's a source country and you need the income for the development of the country and all that. It is true that India is often perceived as being aggressive and as resulting in double taxation. However, and that's the work we will be doing, we need to find a balance, putting an end to the sources of double non-taxation to be better able to have consensus on the rules which are the consensual rule, the principles which will ensure the elimination of double taxation. So we cannot afford having double non-taxation. Otherwise, you have the countries walking away. You have India saying these principles are not good because I cannot collect anything and nobody taxes it.
Mukesh, we can take a couple of specific issues as well.
India's concern from double non-taxation really arises from certain specified treaties. But I think the larger concern that multinationals have in India is that will the treaty disputes be resolved, number one. 2, also that because of this tax activism that we are recently seeing with very select companies, revenue authorities then have a tendency to paint everyone with the same brush and everyone is considered as indulging in double non-taxation. Tax rates in India are very high, so there is very little incentive for anyone to be able to shift profits to make use of any tax arbitrage that's available. So I think the larger concern, what would be important is to see how now India participates in the BEPS initiative.
And on that front, we are fully aware of some of the problems that the businesses encounter in many countries, not only in India, also in OECD countries. And that's why one of the actions is about mutual agreement procedures. How can we improve mutual agreement procedure? If we come to the point where we eliminate double taxation, we ensure that there is no double non-taxation, then we need to have a good, efficient mechanism to solve disputes when they occur. And arbitration might be a solution for that. And then the governments will feel more confident that the profit doesn't shift. Yeah. India should feel so as well. And maybe they will be more confident and therefore more able to implement more efficiently the mutual agreement procedures. So that's what we're doing with all OECD countries, with all non-OECD G20 countries. We have India, China, Argentina, Brazil, South Africa, Saudi Arabia has joined, Russia is joining, and we're waiting for Indonesia to join. We have then the 8.
Interesting point on mandatory arbitration. I don't know many of the non-OECD countries who are in the G20 combination, whether they have mandatory arbitration in the tax treaties, but India does not. India's treaty policy is very clear. We will not embrace mandatory arbitration because we will otherwise abdicating our judicial authority to an arbitrator. What's your view on that?
Well, that's not specific to India. Many countries are like that. In Europe, you have a convention on arbitration which is poorly implemented. The US has started with Canada, and I think now it's into force. But you can see that all countries, because they are sovereign from a tax perspective, are more than reluctant to get engaged in mandatory arbitration. That's why, if we want them to get there, and I think that's the right direction, we need to give them comfort that the current system is not a one-way street where businesses enjoy double non-taxation and that's it. So if we restore the balance, maybe the points of view of the different countries will change.
On some specific issues like permanent establishment, digital economy, some of the panelists at the Congress with you yesterday felt that the OECD should probably take the path of examining whether tweaking the existing rules are enough instead of coming out with wholesale new instruments. So do you that some would say is an incremental approach, whereas you are taking a radical approach. So would you agree with that point that there was again and again that came up that maybe you could look at tweaking some of the rules relating to PE or digital economy?
In the BEPS action plan, we have an action on the digital economy to understand what is at stake, how it works, and what are the new issues which will be the challenges of tax administrations and taxpayers for the next 20 years. So we'll be working on that. We also know that we have a number of deficiencies on transfer pricing, on the permanent establishment, and also new areas where we need to bridge the gaps between tax sovereignties, interest deductibility, CFC legislations, and arbitrage that needs to be addressed. So all these is the framework of the action plan, and within the action plan we'll be dealing with the elimination of double non-taxation when the deficiencies result in taxation nowhere. In addition to that, at some point there will be another debate, and I'm not sure that there will be any kind of consensus, which is the balance between source and residence on the permanent establishment, on transfer pricing, and then other provisions in tax treaties. So this will come, and I think the OECD will be the place where the debate will take place, because that's now the place which tends to be global. That's what we want to do, because we need to have all the countries' views reflected in the discussion, and I'm very much pushing for that. As you know, I created the Global Forum on Transparency and Exchange of Information. We have 120 countries on an equal footing. Now the BEPS project, we have 40 countries plus on an equal footing. So we'll have that debate. But there are two debates. One is double non-taxation is not acceptable by anyone, and we need to solve it, and we'll do that in the next 2 years. And then you have another question, which is, what's the balance between source and residence, which ultimately is to be solved bilaterally by the countries. But we can clearly help this debate, frame this debate, and see where the world is moving in the next years.
We'll take two issues, Mukesh. One is transfer pricing and exchange of information. I'll leave exchange of information to him. But on transfer pricing, you had a lot of panel members, especially from industry, saying yesterday that make the rules simpler. You know, there is too much of information, and the tax administration many a times don't know what to do with that. So how are you going to make TP documentation rules simpler? That's one of your ambitious action plan, that you want to have a common TP documentation across jurisdictions.
No, the answer is simple: country by country reporting. This is what it is about. Give the broad picture instead of tons of documents, which are costly for both businesses and the governments and not that helpful. Country by country reporting. Where is your profit? Where is your tax? And then the tax administrators will be able to do the risk assessment. So this is what we'll be doing. There is an action on that.
Pascal, I have last two questions. On borderless digital transactions, taxability, The fear is this will again raise the debate on source versus residence based of taxation. We heard the US views yesterday. India wants to follow a very strict source-based taxation. My fear is that this fight between residence and source-based taxation, which will again get resurfaced in the BEPS discussion, could result in economic double taxation. What's your view on that?
The answer is yes, you have risks when countries are not able to come to terms. And that's why we are here to say, why are they not able to come to terms? And some countries, the source countries, but not only, are currently saying the rules don't work, so we walk away from the rules. And that's why we're doing the BEPS project, so that they don't walk away from the consensus, so that they agree that there are common principles that you need to respect. If a country doesn't respect the common principles, it does harm to itself in the mid or long term, and this is at risk in all countries, including in India. If you don't behave according to the rules which are commonly agreed, then you face the risk that the investors will walk away in spite of all the interest of being in a growing economy when growth is there. But getting the consensus is difficult because the interests are not aligned, but that's the hard job that we're trying to do.
Well, last question. 15 items on your agenda. Many people feel that you're trying to eat more than what you can chew. Is there an element of prioritization as to what would you be focusing on, Class A, Class B? Or do you think that in the defined time frame you will be able to come out with clarity on all the 15 items?
We have 15 actions which are all priorities. So it's not a random list. It's a consistent action plan. It's a comprehensive action plan. We need to achieve them all, otherwise we'll not address the problem. And I insist on this comprehensiveness of the action plan. Now, we have different deadlines, 1 year, 18 months, 2 years. So these are the priorities if you want, but actually it's not really based on priority, but our ability to deliver. We have a political mandate. Now it's time to implement. The technicians know where they must be, so they shouldn't be stopped by technical hurdles, and we'll do it.
Yeah. Well, I mean, a lot of burden on your shoulders. Yeah. I mean, I can merely wish that you are able to achieve all of this, and no one walks away from the negotiation table.
Last question from me: multilateral instrument, Mukesh. I mean, everyone's wondering. Philip Baker the other day expressed a lot of skepticism. How are you going to implement the BEPS action plan if you have to change 3,000 treaties? Is multilateral instrument a multilateral agreement between all the countries? Something of that sort. Is that going to be the answer?
It's one of the actions. It's not the only answer. The very fact that we have this report, that we have a sense of direction, I think is having an impact on businesses and also on governments, making some more comfortable on the sense of direction, making some others aware that they need to change. So we already have an impact. And the multilateral convention will definitely, or should definitely, be an instrument to have a fast implementation of the instruments that will come up with changes in the model convention, changes in the commentary. It's awfully difficult, but if you don't try, you'll never get it.
And US is on board, because there are press reports that the USA is not happy with some of these action points.
That's just wrong. All the actions, this action plan is a consensus document, meaning that all the countries, including the G20 non-OECD countries, have agreed it. So they agree in what is in the action plan. So don't listen to people who just don't understand what consensus means. Nobody has objected this. It's agreed by everybody. Will it be easy to move there? No. Are there technical questions? Yes. Are there possible differences? Yes, but again, the sense of direction is agreed, and next week it will be agreed by the president and prime ministers of all these 40-plus countries. So everybody agrees on that, and there is a mandate.
When do we see you in India?
I'm coming in October.
Look forward, Mr. Amans. Thanks so much for your time.
Thank you.
Thank you.
Pascal, all the best for your discussions.
Thank you.
OECD.
Thanks.